Often investors use money market accounts as a way to ensure that an individual's accounts and investments are protected, especially when the stock market is in a volatile environment. Recently, changes were made by the Securities and Exchange Commission on the reporting requirements for money market accounts. And here to share with us how these changes could affect you is Garrison III from Preservation Financial. Talk to us first about these changes and how they came about.
They were enacted by the SEC, as you said. And it was reported by the Wall Street Journal August 5th of this year that effective October 14th, the reporting requirements are going to change for money market funds. They've always been, money market funds have always been quoted at $1 a share.
Right.
That's just been the standard. But that's going to change October 14th. And they're going to have to report and basically let the value of money market funds float. In other words, there's a saying in our business that money market funds may break the buck, which means go below $1.
Right.
And this is because of the negative zero interest rate environment that we're in, online banking, banks are really losing money right now. And if it breaks the buck, and let's say it goes to 90 cents a share, okay, your $100,000 is now worth $90,000.
Wow.
That's not the scary part.
Mm-hmm.
The scary part is that the SEC also changed the rules to encourage saving, and what they have done is they can actually restrict your access to your money market funds if the economy is in a state of stress.
Ah.
Now, who determines that? We don't know.
So it could be, it sounds a little, I don't know, iffy there, that who comes up with that stress? I mean,
exactly.
I mean, who makes that determination? But you said that wasn't the scary part, but if your $100,000 is only worth 90, that to me is pretty scary.
That's scary. Yeah. And then the potential for not being able to access that,
right,
withdraw it.
Yes.
That's doubly scary.
Oh, yes.
And a lot of it is because of the negative interest rates.
Right.
On worldwide, in addition to that, mm-hmm, there are about $13 trillion in government bonds that are reporting negative interest rates. And that is, J.P. Morgan has reported, I believe it was the 14th of August in Financial Times, that we can expect negative interest rates for another 5 years.
Now, is money market accounts something that you use extensively in your business?
It's more of a do-it-yourself,
okay,
type of situation for
right,
people.
Right.
CDs, money market funds, they're frightened by the market, mm-hmm, a lot of volatility like right, it is right now.
Yeah.
They'll move to safety, which is supposedly
quote safety.
Yes.
All
quote
right,
safety. Yes.
And what advice would you give folks right now that do have money market accounts?
Take a good look at them. Mm-hmm. Give us a call.
Right.
For over a year now, we've been talking about vehicles and strategies that we have that do not participate in the downside of the market. People are much more concerned. They don't mind losing 0.5%, 1/3%, as opposed to 10, 30, 50% again to the market. And all of the strategies that we have outlined over the last year plus do not take part in the downside market, only gains.
Right.
And guaranteed lifetime retirement income, lifetime income annuities. Cash value life insurance is an overlooked jewel in the marketplace.
All right. If you have any questions whatsoever, you need to go see this man today, Preservation Financial Group there on Sunset Drive in Johnson City. They will help you take care of your retirement savings.